Hello everyone. In last session, we discussed with regard to investment, in that investment, meaning of investment, then characteristics of investment, then investment versus speculation, investment versus gambling, right? These concepts we discussed. In this session, we are going to discuss investment process. What do you mean by investment? Investment means sacrificing something today to earn something in future is nothing but investment, right? Hope you're clear. Sacrificing something today to earn something in future is nothing but investment. Now, what is investment process? Process is nothing but steps. Okay. Now, under investment process or steps, there are five. First one, framing of investment policy. Second one, investment analysis. Third one, investment valuation. Fourth one, portfolio construction. Then fifth one, portfolio evaluation. Now, first one, framing of investment policy. What is this framing of investment policy? See, every investor has to formulate the policy for the systematic functioning. Every investor, before investment, he has to formulate the policy for the systematic functioning of your investment source. Is it clear? Now, under investment policy, there are few ingredients. What are the ingredients? What are the things included in framing of investment policy? What are the things included? What are the essential ingredients included? In that first one, determination of investable funds or the amount to be invested. What is the first step in investment? That is framing of investment policy. In that first one, amount to be invested, you are going to determine or you are going to decide how much amount you are going to invest. Clear? That is the first step, right? How much amount you are going to invest, that is investable funds. Investable funds, that is the first step. Okay. Then second one, you are decided how much amount you are going to invest. Then second one, what is the purpose of investment? That is the second one, that is objectives. Investment objectives, right? Second one, investment objectives. Now, how much amount you are going to invest, that you are decided. Now, what is the purpose of investment? Whether it is for children's education purpose or for daughter's marriage, right? There is some purpose for investment. Clear? That is the second one. Then third one, identification of potential investment sources or potential investment assets. Identification of potential investment sources or assets. Potential, sorry, potential investment sources. Now, what is this potential investment sources? You have decided how much amount you are going to invest and what is the purpose of investment. Third one, you are going to identify the different sources of investment. Is it clear? Identifying the potential investment sources or identifying the different sources of investment. Like take for example, you have decided to invest 50 lakh. Okay, you have decided to invest 50 lakh. What is the objective? Children's education and or else daughter's marriage. Okay. Now, what is potential investment sources? Take for example, out of 50 lakh, you can invest in equity shares, then preference shares, debentures, then real estate, gold, right? Right? These are the potential investment sources. Hope you are clear. identifying the potential investment sources like equity shares, preference shares, debentures, bonds, then like a post office, then bank as FD, then LIC, then gold, silver. These are the investment, potential investment sources. Hope you're clear. First one, investable funds. Second one, objective. Third one, identification of potential investment assets. Next, fourth one, consideration of attributes of various investment assets. Consideration of, 1 minute, consideration of, fourth one, that is D, okay. Consideration of attributes, in the sense characteristics. Characteristics of, 1 minute, characteristics of various investment sources. Characteristics of various investment sources. Now I told you, what about identification of potential investment sources? That is nothing but like equity shares, preference shares, debentures. You are identifying the different investment sources. Now fourth step is consideration of attributes of various investment assets. What is this attributes? Attributes is nothing but characteristics. Now take for example, you are going to analyze the characteristics of, take for example, equity shares. Okay, equity shares, this is one source, right? Then another one, preference shares. Okay, now what about equity shares? What about their characteristics? Like they are having voting rights, then they get written in the form of dividend. This is risky source, right? These are the characteristics, the attributes of various investment sources. Is it clear? Then you are going to study preferences. What about their characteristics? Then what? Then for debentures, okay. What about their characteristics? Then mutual fund. What about their features or characteristics, attributes, characteristics, features, one and the same. Okay, mutual fund, their features. According to your objective, you are going to select the investment source. Remember this. Okay. So fourth step, characteristics. That is consideration of attributes or characteristics of various investment sources. Then last one, that is allocation of investable funds to various investment sources. Now, fifth one, I mean E, first one, amount to be invested, that is determination of investable funds, okay. Second one, determination of investment objectives. Then third one, identification of potential investment sources or assets. Then fourth one, consideration of characteristics or attributes of various investment sources. Then E, or fifth one, that is allocation of investable funds to various investment sources. Last step, that is allocation. Allocation. Is it clear? Allocation of investable funds to various investment sources. Now here, uh, how much amount you have? 50 lakh, right? In that 50 lakh, how much amount? 10 lakh to equity, 10 lakh to preference shares, or 10 lakh to real estate. Like that, you are going to allocate the amount to different investment sources. Okay, that is nothing but allocation of investable funds to various investment sources. Hope you are clear. Hope you understood framing of investment policy. What is framing of investment policy? Framing of investment policy is nothing but every investor, before investment, he is going to formulate the policy for the systematic functioning. In this, there are few ingredients or things included. First one, First one, how much amount you have to invest, then what is the purpose of investment, then identifying the different investment sources, then studying the characteristics of various investment sources, then last one, allocation of allocation of investable funds or amount to the various investment sources. These things comes under framing of investment policy. Hope you are clear. Next step, that is investment analysis. Next step, that is investment analysis. Now, what is this framing? Sorry, second one, investment analysis. Now, what is investment analysis? Investment analysis. Here there are two. One is second one. 1 minute. Investment analysis. Here there are two. One is fundamental analysis. Fundamental analysis, and second one, technical analysis. Sorry, technical analysis. One is fundamental analysis, second one technical analysis. First step you are clear. Second step, that is investment analysis. In that there are two. One is fundamental analysis, another one technical analysis. Now, what is fundamental analysis? First one, fundamental analysis. Here, fundamental analysis is really a logical and systematic approach to estimating the future dividends and share price. Fundamental analysis is really a logical and systematic approach to estimating the future dividends and share price. It is based on the basic premise that share price is determined by a number of fundamental factors relating to the economy, industry, and company. Say, fundamental analysis is nothing but studying the basic things about the company, right, before investment. That is fundamental analysis. It includes economy analysis, industry analysis, and company analysis. Okay, these concepts we study in detail. Separate unit is there. Okay, both fundamental analysis and fundamental analysis and technical analysis. Both fundamental analysis and technical analysis, both separate units, separate topics we are going to discuss in detail. Okay, now what is fundamental analysis? Now I just give you meaning of both fundamental analysis and technical analysis. What is fundamental analysis? Fundamental analysis is nothing but studying the basic foundation of the investment company. Is it clear? Fundamental factors relating to the economy, industry, and company. Economy, economic condition, industry analysis, then company analysis. These things is nothing but fundamental analysis. Is it clear? Then what about technical analysis? Technical analysis is nothing but a technical analyst believes that the share prices are determined by the demand and supply forces operating in the market. Share price is determined on the basis of demand and supply forces in the market. That is, technical analyst believes. See, these demand and supply forces in turn are influenced by a number of fundamental factors as well as certain psychological or emotional factors. Okay. Along with fundamental factors or fundamental analysis, share price also depends on demand and supply forces. Here, it includes psychological or emotional factors as well. Is it clear? In technical analysis, we are going to study, that is Dow Jones, that is Dow theory. Okay, Dow theory, then charts, technical charts, then moving averages. Okay, these are we are going to study under technical analysis. Is it clear? Investment analysis. Before investment, you are going to analyze the investment source. That is nothing but investment analysis. While analyze in investment analysis, there are two. One is fundamental analysis and technical analysis. Fundamental analysis is nothing but you are going to study the basic things about investment source or investment. Take for example, if you are investing in company, then basic foundation or basic things you are going to study, that is nothing but fundamental analysis. And the fundamental analysis, the three: one is economy analysis, industry analysis, and company analysis. Okay. Then in technical analysis, second one, technical analysis. Technical analysis is nothing but, along with the fundamental factors, some emotional or psychological factors also influences. Okay. These psychological or emotional factors we are going to study through Dow Jones, that is Dow theory, technical charts, and moving averages. Okay, this demand and supply forces which influence over the share price in the market. Okay, this study we are going to do through this Dow Jones, Dow theory, technical charts, moving averages, etc. Okay, this is nothing but technical analysis. Hope you are clear. This is the second step, investment analysis. Okay, fundamental analysis and technical analysis. In detail, we are going to study in upcoming classes. Okay, so next, third step, investment valuation. Now, what is investment valuation? See, the valuation helps the investor to determine the return and risk expected from an investment in the common stock. The valuation, investment valuation helps the investor to determine the return and risk expected from an investment in the common stock. What is investment valuation? The valuation helps the investor to determine the return and risk expected from an investment in the common stock. In other words, investment value is generally taken to be present worth to the owners of future benefits from investment. See, what is investment valuation? As an investor, you are going to know present worth of the source and future benefits of your investment. That is nothing but investment valuation. Is it clear? Investment value is generally taken to be present worth to the owners of future benefits from investments. That is nothing but investment valuation. Is it clear? In that there are two. One is intrinsic value, another one future value. Here under investment valuation there are two. One is intrinsic value. Intrinsic value, another one future value. Sorry, intrinsic value and future value. Now, what is intrinsic value? Intrinsic value refers to the value of a company's stock or share determined through fundamental analysis without reference to its market value. Here, what is intrinsic value? Intrinsic value refers to the value of a company share determined through fundamental analysis without reference to its market value, without considering the demand and supply factors. Here, share price is purely determined by fundamental factors, that is company analysis, economy analysis, industry analysis. Is it clear? That is intrinsic value. Then what about future value? Future value is the value of an asset at a specified date. Future value is the value of an asset or a share at a specified date, that is future value. These are the two types. One is in investment valuation, one is intrinsic value method, another one future value method. Is it clear? Hope you're clear. Then fourth step, that is portfolio construction of the portfolio. Now what is portfolio construction? That what do you mean by portfolio? Portfolio means grouping of securities. Portfolio means grouping of securities. What is this grouping of securities? Take for example, you have 50 lakh, right? As I told, 50 lakh your investable funds or amount to be invested. Okay, here you are selected sources like equity shares, debentures, then bond, okay, and real estate. Take for example real estate. Okay, now you are going to invest 10 lakh in equity shares, 10 lakh in debentures, 10 lakh in bonds, and remaining in real estate, that is 20 lakh, right? As 20 lakh. So so now what about your portfolio? Portfolio is nothing but grouping of securities, that is equity share, debenture, bonds, and real estate. This is your portfolio. You are going to invest this 50 lakh into this four securities. Is it clear? Now, the portfolio is constructed in such a manner to meet the investor's goals and objectives. See, your portfolio, your portfolio is purely based on investment goals or objectives. Investment objectives. Take for example, what is the purpose of investment? Take for example, your investment objective is to um, daughter's marriage. Take for example, daughter's marriage. Would you like would you like to invest 50 lakh? You have in 50 lakh worth rupees, or take for example, 10 lakh rupees. You have 10 lakh rupees, okay? After 18 years, I mean, after 25 years, you need this. You are going to marry. You are going to do your daughter's marriage, okay? After 25 years, you are going to do daughter's marriage. Then where you would like to invest this 10 lakh rupee? That is the question. Depends upon the investment objective, you need to construct your portfolio, right? Now, you have 10 lakh rupees. After 25 years, your daughter's marriage. So, what, where you would like to invest? Would you like to, in case, take for example, if you are not ready to take any kind of risk, then you are going to invest in bank, right? Entire amount you are going to invest in bank, or else you are going to invest in some safety securities, right? Like post office, or else uh, then bank, right? These are the safety security, or debentures, bond, government bonds. These are the safety measures. Okay. Now, if you are ready to take a risk, then you can invest in equity shares, debentures, bonds, real estate, right? It depends upon the investors. Those take for example, investor is ready to take a risk, then they are going to invest in risky projects, okay? Those who are not ready to take a risk, they select, usually they select bond or bank, like such securities they are going to select. Okay, hope you're clear. What is portfolio construction? Depends upon your investment objective, you are going to construct your portfolio. Is it clear? Okay. Last step, that is portfolio evaluation. Now, what is portfolio evaluation? See, already take for example, you are invested 50 lakh into equity shares, preference shares, debentures, and bond. Okay. Now, what is portfolio evaluation? Portfolio evaluation is nothing but comparing the return and risk of the different sources, changing the portfolio according to risk return factors. Changing the portfolio according to risk return factors. Take for example, you have invested 10 lakh here, 10 lakh here, 10 lakh here, and 10 lakh in uh, what is this bond. Okay, here you invested 20 lakh. Now here you get, see, here you get fixed rate of investment, right? Even in debentures as well. Now equity shares, here you get, see, after a few months, here you get like 5,000 profit. Here you get 10,000, sorry, here you get 15,000, here you get 10,000. Okay, here you get uh, like 6,000. Okay, here you get uh, 12,000. Okay, this is your return after few months. Now, in case, what is portfolio evaluation? Portfolio evaluation is nothing but changing the portfolio according to risk and return factors. According to risk and return factors. Now, here return, if you invest in equity share, you get 15,000 return. For preference share, you received 10,000 return. Debentures, you received only 6,000. A bond, you received 12,000. But in here invested 20 lakh, okay? In bond invested 20 lakh, so you get 12,000. So it is nothing but debentures and bond, same type of return, okay? 6,000 and 6,000. If it is 10 lakh, 6,000 only, okay? So here it is 12,000 in bond. Now, here, see, you are going to analyze these sources about return, especially return. Then you're going to change your portfolio. Take for example, here you receive less return, right, compared to equity shares. Now, what you can do, you can withdraw this preference shares, you can sell this preference share, and you can invest in equity shares. Is it clear? Because here you can earn more profit, more return. So this is nothing but this is nothing but portfolio evaluation, changing the portfolio according to risk and return factors. Or else you can take, for example, here you received only 6,000, right? If you are ready to take risk, you can sell your debentures and 10 lakh worth debentures, and you can invest in equity shares. Is it clear? Here you can earn more return, like that. This is nothing but portfolio evaluation, comparing the return and risk of different sources and changing the portfolio according to risk and return factors. Is it clear? This is nothing but portfolio evaluation. Hope you are clear. What are the different steps of investment? First one, framing of investment policy. Second one, investment analysis. Framing of investment policy, in that what are the ingredients? First one, determination of investable funds, investment objectives, potential investment sources, identifying the potential investment sources. Then fourth one, consideration of various characteristics of investment sources, then allocation of investable funds to various investment sources. That is comes under framing of investment policy. Second one, investment analysis, in that fundamental analysis and technical analysis. Okay, fundamental analysis, basic study of fundamental factors about the investment source. Technical analysis depends upon demand and supply. uh, the share price decides in the market. So here technical charts, Doe theory and moving averages, these are the tools you can use to uh, do in technical analysis. Okay, then these two comes under investment analysis, that is fundamental analysis and technical analysis. Then third one, investment valuation. Investment value is generally taken to be present worth to the owners of the future benefits from investment. Is it clear? Then fourth one, portfolio construction. Portfolio means grouping of security. You are going to construct your portfolio according to, depends upon investment, your investment objectives or goals. Then last one, portfolio evaluation. Portfolio evaluation is nothing but changing the, comparing the return and risk of the different sources, changing the portfolio according to risk and return factors. That this is about portfolio valuation. Hope you understood. This is very important concept. In case any doubts, you can contact me. Okay, thank you.